First of all, let me wish viewers a very happy Easter holiday. The global stock markets have become extremely volatile of late. As we can see, there are tremendous factors which are beginning to play. The tech rally of internet stocks is beginning to deflate and is threatening to take down other areas of the market down as well. This was quite expected as the earnings were not commensurate with the valuations that these internet stocks were fetching. I believe that the next on the anvil are the banking stocks, the commodity stocks, which are going to get hammered in various parts of the world. I'll explain to you why. China is one of the biggest consumers of commodities and is indeed beginning to slow down. An area where one can really glance is the real estate market in China. The property inventory, which is lying currently, is at all time highs. There are talks of ghost cities which remain unoccupied. Naturally, there are a lot of countries which are dependent on supplying to China, the commodity intensive countries, so as to say, and they are going to get into a lot of trouble. Of peculiar interest is the Australian economy, very commodity intensive and a great supplier to China. Surprisingly, the Aussie dollar, popularly also known as the Aussie, has been going up even in the face of a tremendous slowdown in the Chinese economy. I believe this is going to correct. So we look at Europe, which is still suffering from asset deflation, China slowing down dramatically, the US economy, where I believe the Federal Reserve is going to raise interest rates sooner than most analysts think. The reason being that the economic recovery is faster than most anticipate. Although the figures do keep varying from month to month and they give an impression that the recovery is slower than what you think. But I think this was more due to seasonal factors than the true economic strength. Elections taking place in various emerging economies. Indonesia, I think the results were more disappointing than most analysts anticipated. Come to India. Tremendous stock market rally has taken place in anticipation of a pro-reform government being formed at the center. And there is every likelihood of a change in the government. But I personally believe, and this is a very rare opinion that you would hear, is that the eventual election results will not be commensurate with the general expectations. The markets, stock markets in India have run far ahead of themselves, and they are setting for a tremendous amount of disappointment as the election results start pouring in on May the 16th. The reason being that whether or not the BJP forms the government, the coalition partners which it would take along with it would have their own agendas. At the same time, if they are not pleased with the way the parent party tries to project its economic policies, there could be a lot of compromises, and the hope on which the markets are running up that the new government will be tremendously pro-reform may not sustain. It is also likely that some other parties may form a fractured government, and this may not last too long. So there are pockets of weaknesses in various parts of the world, and this should begin to unravel itself in some time. The global stock market rally should be interrupted very soon. We will talk later by when. And from after some periods of correction, which I believe is just around the corner, we could see some good strength coming in. But we will discuss soon when this correction will come in and how long it will sustain. Stay put, take care, bye bye.